Financial returns and social returns don't have to be mutually exclusive, as this was so eloquently put by Ellevest, the women's investing platform. And the good news for us investors is that there is an increasingly number of ways that we can invest our money and thereby make a difference in the world. Watch this video to find out how you can get the best social bang for your buck. Hi there, I'm Michelle. Welcome to my channel where we talk money and having more of it. And in this video, we are going to look at how choosing to invest in a socially responsible way can in fact change the world. Now, it's expected the world's population will reach a staggering 9.7 billion by 2050, which is really worrying given that it is evident 7 billion people have already wreaked havoc on this planet. You can see that in the effects of climate change, deforestation, the number of extinct organisms, the depletion of our natural resources, and these are screeching alarm bells that are telling us that we cannot leave this for our ever-increasing future generation to fix. We have an obligation to this world, to our families, and yes, to ourselves to make some radical changes now. And what speaks louder than words and packs a bigger punch than protests and petitions? Well, money does. So we can use our money to direct it towards building a better world by leveraging our money's power through investing in things that we value, in our values. And while we are choosing to make a difference in the world, it is even possible to make a profit using our money in this way. And that means we can increase the power of our money to make these changes in the world and create this a sustainable endeavor of making change. Let's dive in to using our money for good. When it comes to social impact investing, ESG and SRI seem to be the buzzwords and trends of the moment. But they have in fact been gaining momentum over the last 10 years as more and more investors want to know what their money is being invested in and what it's being used for. In fact, the Global Sustainable Investment Alliance reported that at the start of 2018, there were 30.7 trillion of sustainable assets within the 5 largest world markets. And these are the kind of numbers that show you what a huge and meaningful change investing in these kind of assets can create. And Bank of America estimates this market could grow to 50 trillion over the next 2 decades. And to put that into context, the S&P 500, which is the index of the largest 500 companies in the US and makes up 80% of the US stock market, currently has a market cap of 33.4 trillion. Now, as with anything financial, it seems that there has to be confusing acronyms and jargons creeping in. And ESG and SRI are 2 of the less meaningful ones in terms of not really describing what's in this black box of social impact investing. So let's take a look at what they're trying to do and what they mean so we can understand what they want us to be investing in. E is for environmental, and this considers whether a company is positively or negatively impacting the earth. And it's typically evident in their policies to climate change issues, to air and water pollution, to water scarcity, to waste management, and to energy efficiency. S is for social, the people aspect, how the company treats its employees, its customers, its consumers, and its suppliers. Now, important aspects to consider is the company's diversity and inclusion policies, their ethical supply chain sourcing, and their policies on social issues. G is for governance, and this is how the company's directors and its leadership approach the shareholders, the employees, the customers, and any other stakeholders in the business. Now, as investors, we want to see an alignment of the management's incentives to the business success. And we don't only mean financial success, but also their success in terms of meeting their values. And this would cover the executive compensation incentives, which should be then tied to the stated ethical, environmental, and social values such as diversity of board and employees, the history and reporting to shareholders, and evidence of the commitment to their environmental, social, and governance objectives. Socially responsible investing is a branch of ESG investing, and it's generally based on excluding so-called sin companies from ESG investing. And this will be in terms of particular criteria. So tobacco, alcohol, weapons, gambling are examples of these companies. But others may be screened out for employee treatment, use of fossil fuels, or failures in corporate governance. So what investors can look out for is the company's sustainability reports, which should give details on their ESG or SRI compliance, and they should be prepared in accordance with recognized reporting standards such as the Global Reporting Initiative and the Principles for Responsible Investing. Now, this all sounds very much rainbows and unicorns, and you may be wondering, how does ethical investing create the social responsibility? Well, the reward for work well done is the opportunity to do more. And this is never more true than a company effectively implementing sustainable practices. This not only gets them a wider range of investors, and especially relevant when you consider the number of investors that are considering sustainable practices the leading criteria for their investment, but it's also been shown to provide the company with other significant benefits, such as a reduction in company risk. So climate change and resource scarcity are global issues, but on a company level, they pose serious risks to a company's profitability and its longevity as well. A large US power company was recently forced to declare bankruptcy after it was found to be liable for contributing to the wildfires in California. And it was considered that this company was a cause of the effect of climate change. Secondly, it can boost a company's profitability. Now, a happy workforce is undoubtedly a productive one, and studies by Gallup have shown that a strong, loyal workforce built on trust, fair treatment, and support is able to grow earnings per share 4 times higher than less satisfied rivals. In addition, research by McKinsey has shown that a diverse workforce contributes to above average earnings, it's more innovative, and has higher levels of performance. Now, this sounds like a real life win-win situation all round. We all undoubtedly want to use our money to make a positive change in the world, but we need to be able to do so in a sustainable way. So how can ethical investing benefit us as an investor? Well, firstly, it does make you feel good because we've got greater autonomy in directing our money to where we want it to go. And we can feel more comfortable that we are using our money in a manner that's consistent with our values. And secondly, the basic dollars and cents part of it is that ethical companies outperform their industry peers financially. So companies with strong governance oversight outperform their poorly governed competitors. Those that prioritize their ESG generate superior long-term returns in terms of their financial metrics, such as higher revenue, higher return on equity, and higher return on investment. So this is a compounding positive because as the more sustainable focused they are, the better the talent they will attract, the greater the ability to build a loyal customer base, and thereby mitigate risks to their future survivability. And while this is not a prediction of future performance, what has happened over the last 10 years is that the ethical investment indices have outperformed those that don't particularly focus on ESG and such. And this is largely due to the underperformance over the last 10 years of the oil, mining, and tobacco stocks. So research produced by Willis Owen, one of the largest DIY investment platforms in the market, shows the FTSE 4 Good UK index returned 125% over the last 10 years versus the 118% of the FTSE All Share Index. And the gap in the US was even more significant, with the FTSE 4 Good returning 373% versus the S&P 500's 321%. Sadly, socially responsible investing isn't yet totally sunshine, rainbows, and happy days. There are still a few wrinkles to be ironed out. Many companies claim to be socially responsible, but in fact aren't. And a case in point, Volkswagen, who had a greener than green, cleaner than clean image, turned out to be just that, an image. And the definition of ESG isn't entirely objective either. Nuclear energy could be seen as a positive alternative to fossil fuels. But in terms of the potentially damaging impact of a nuclear accident, it could be an environmental disaster. Certain companies have made it into the ESG index for their excellent governance and reporting records while carrying out production practices which are damaging to the environment or are known for their unfair labor practices. Being 100% confident that your ethical investment choices are in fact ethical is still a murky area. But I believe as ethical investing continues to grow, that investors will become more demanding in their requirements for compliance. And in the future, we will see a lot more clarity and evidence as to how socially responsible companies are. While there are still these wrinkles that need to be ironed out, it still makes sense to put your money to use in a way that's consistent with your values. Now, it's still a bit challenging for a beginner investor, or in fact any investor, to invest ethically, given the jargon and the acronyms being thrown about in the financial services community. But the robo-investing platform community have spotted this gap, and they are trying to make a difference by offering simple, clear portfolio options from as little as £1. Alternatively, Esg Etfs are also a good option. The UK and Europe have been very focused on ESG factors for many years, and there are good opportunities within this ESG ETF community. I've put a link in the notes below to Just ETF, who have ranked the best performing ESG ETFs in Europe. You carry a significant amount of power in how you choose to use your money, from how you spend it on a daily basis to the more expensive items. And now you can choose to invest it consistently with your values as well. Imagine the difference you can make, not only in your micro universe, but also in the wider world, by making a conscious choice to spend your money wisely. For more talk about the markets, money, and other things that build a wealthy life, pop over to herwealthiq.com and sign up to my newsletter. If you like this video, please let me know by liking it and share it with any other ladies who want to change their financial story. And for financial education and money talk designed for women, please subscribe to my channel. Thank you very much for watching this video.